The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So joining us now to discuss the crypto markets and give us more insights is Lars Seier Christensen. He's founder of Seier Capital and chairman of the board of Concordium Blockchain. He was also a co-founder of Saxo Bank. Welcome, Lars.
Thank you.
So let's first start off with just sort of your general take here on the crypto markets at this point. You know, we're right now, Bitcoin is hovering around the 2021 range here for now. We saw obviously the sell-offs over the past few weeks, and of course it seems that Bitcoin and some of the other crypto large cap cryptos are tied to the equity markets. Do you think that will continue? When, if at all, do you see a divergence happening, and how?
Yes, I see that that's a clear tendency recently, that this idea that it would react differently to the equity markets doesn't really seem to be happening, and I think that they for now are somewhat sort of combined at the hip, right? So I would keep a very close eye on what's happening in the U.S. markets in particular, obviously, but stock markets in general. And this is sort of interesting thing about this, that maybe this could be seen as a hedge against other assets, is obviously not playing out at all. But watching also other markets, you look at something like gold. Gold really, with a war in Ukraine and rampant inflation in commodities, should be up, but is in fact down. And normally when that happens, that's because people are short of cash, you know, easy to liquidate assets like gold and probably like Bitcoin in this particular space. It's a lot easier to turn into cash than smaller projects, off exchange companies, etc. So I think also there seems to be some correlation to gold, so would also keep an eye on that.
You know, we're seeing, and you know, there was that report, of course, that people are shorting the likes of Tether, and that since the whole UST debacle, that generally hedge funds are looking for another way to short stablecoins. Do you think that that's necessarily a wise move? Do you think that it's a fool's errand to try and get into that as a way to sort of bet on a more volatile or at least a downside to crypto?
Well, we have to be aware that these professional market participants, they're just looking for where there is an opportunity, and clearly with the recent disasters in terror, you know, stablecoins are a little bit the center of attention at the moment. I would say particularly algorithmic stablecoins I would be concerned about, but of course at least general concern about is USDT backed in the way that they claim to be backed. And the problem seen from a professional actor's point of view, or rather from USDT's point of view, is that it's actually a pretty low risk thing to short, right? Because the idea is to hold it stable around 1, obviously, and then there's presumably not much risk of it going to 2. So you could say the risk is on the downside here, and that's the opportunity for hedge funds and other aggressive traders. So I think it's a bit of a difficult situation that many of these very stable coins, algorithmic or asset backed, are in, because speculation against them is relatively free, right? In that you can short them at 1. The upside is obviously if it then goes to 0 or a much reduced level, whereas the risk of them going through the roof is very low. I guess that's the way professionals analyze it, and that's why they would take those positions.
You still have to pay. You still have to pay interest, right? Because you're borrowing.
Yeah, sure.
You know, yeah.
But these would be, you know, relatively short-term speculations. We see that frequently also in traditional markets. You know, people will speculate against pegs between currencies tied to the euro, currencies tied to the dollars, and most of the time it doesn't come to much. But it's a relatively cheap speculation where there's what we would call an asymmetric risk. You risk relatively little, but the potential gain is very large. And I think that there is a tendency at the moment that people are looking at these stable coins, some of them not that well construed technically either, and having substantial market value, with sort of going against that, with very smart people being able to sort of speculate in the design of them, which was very much what we saw with Terra. It's a risky place to be, because if you're holding up a multi-billion-dollar valuation and maybe not deeply thought through tech and structure, well, it's a little bit like showing a big stake to a bunch of piranhas, right? And that'll always be risky.
Lars, I want to bring up a tweet that you had. You said that, what the market doesn't need right now is another algorithmic stablecoin biting the dust. What are your thoughts on USDD, which was brought together by Justin Sun, the founder of Tron, and also had a protocol that, a product that offered 30% APY. They have depegged down to 93 cents when they're supposed to be pegged 1-to-1 to the US dollar, but now they're back at 98 cents. So I just thought if you could answer your own question, what are your thoughts on USDD and that whole
I think this situation is more of a general comment that those kind of projects are pretty exposed at the moment, and people will have a go, but they don't always succeed the first time or the second time, and they may never succeed, just as we see attacks on peg currencies, which is very similar in the traditional fiat space. So it's not surprising that some people are trying, but that doesn't necessarily mean that it can't hold up if, for example, you do have the assets or you have designed your algorithms in a way that they're hard to break. But I'm just pinpointing that at risk right now for people trying are multiple DeFi projects, stable coins, etc. And there's some pretty smart people that can figure out how to make money on their demise, right? So when you're in that position and you succeeded a couple of times already, then it gets more risky in the short term for other projects that may or may not be similar, but appears similar. You also think when hedge funds trade, I mean, there's not exactly great detail in their consideration.
Right.
If they attack a country or something, they could easily attack the neighboring country as well. And it's just a risk-off approach in general in the market, and that makes weaker projects more vulnerable.
Well, you mentioned that, it might be difficult for projects to get a start right now. You have your own project, the Concordium, and I noticed that the price of Concordium was about 8 cents back in February. Now it's down to 2 cents, down about 77%. I wonder, what are the challenges for, and it's a layer one, what are the challenges for protocols like yourself trying to build in this kind of market, and do you see it coming back up?
Yeah, I think, this is an overall downturn in the market. And as I just said, actually, people don't really distinguish between the quality of various projects, etc. And when they want to sell off something, they sell off the whole spectrum of people in a given area. So I guess we're just caught in that. For us, of course, we'd like to see the price higher, but we're building the project. We're well funded well into the future. So I'd be more concerned for projects that are very dependent on short-term finance, because that's the same in the tech space outside of this industry. If you have a high burn rate and you're constantly dependent on funding, this is clearly a much more difficult environment than we had 12 months ago, where everybody was sort of more fear of missing out type attitude. But for that, my particular project, obviously, because I know what's in it, I know our funding, I know the quality of the project, I just see it as a response to general market conditions, and we'll get through that, in my view.